Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. And today is Friday. We start the holiday season here, kicking into gear here, December 21st. And hey, the Mayan calendar, I guess, ends today. So let's jump into it. We do got a couple economic news releases scheduled for today. We'll start off with the personal income for the month of November. So back in October, we had a 0.1% increase in the personal income. There was a forecast of about 0.4, which is nice, and we exceed that to 0.6, so nice. A lot of people are seeing an increase in income in the month of November. Then we also get consumer spending for the month of November, so we'll kind of see, of course, retail and stuff like that for November as well. We had a negative, a little contraction back in October, and the forecast for November was about 0.4, and it came in at expectations. So we had a little bit of increase in spending in November. As you know, as you very well know, we have the Black Fridays, and then a lot of holiday shopping begins. And then the next item to note is durable goods orders for the month of November. We had a 1.1% increase for October. We had 0.1% forecast for November, and we had 0.7. So we had a nice increase for month of November exceeding expectations. And last but not least, we have the Consumer Sentiment Index. So this is an index that the University of Michigan puts out, and they do two of them. They'll do one towards beginning the month, and then the final revision towards the end of the month. So we had a 74.5 for their index, and 75 was the forecast. So they figure it's going to go up a slight tick, and it dropped to 72.9. So people are feeling a little less comfortable where things are at. After in the month of December, so we'll kind of have to wait and see how that plays out. That's not at least the good news, because that could be a sign as to where things come. If people aren't feeling good about things, they're going to pull back on their spending. People pull back on their spending, kind of puts us into a recession. So we need people out, obviously feeling good, out spending money, help the economy kind of get on a roll here. So let's go ahead and take a look at the headline news in store here. It's not a lot here. The stock market's down, not quite as bad as the doomsayer is saying about the Mayan calendar, but it's down quite a bit. The Dow is down about a little over 100, 120, 130 so far this morning, and a lot of that again seems to be a result of the fiscal cliff. So what happened was the Republicans were going to try to pass through a Plan B, which is basically increase the income level from 250, and then they also talked about 400 to about $1 million. So those were $1 million to raise the taxes on those people and pass it through the House. And there's a couple Republican defections that prevented it from going through in the House. So that kind of failed. So now it's kind of back in Obama's court as to how they're going to proceed with the fiscal cliff negotiations. So it kind of gives a little bit more leverage to Obama in this scenario, because if the Republicans were able to get the votes through with it, it would have given them the Republicans a little bit more leverage going through with it, even though they didn't expect this to go through. All right, so let's go ahead and jump over, see how this is playing out with the bond market. So we're seeing a nice improvement, as you see in the last couple of days here. We've had some improvements as the stock market's been down in the last few days. I'd be careful right here, because we do have a opening gap here. This could easily very well close. But right now we're up about the 10-day moving average. We are testing the ceiling. The ceiling did, so we basically are starting this above the ceiling. So this could be something to watch for, to keep an eye on. But we could have a nice little run today, but be cautious on next week, because we do got the holidays. The big investors go on vacation, usually head to their homes in the Hamptons, and so it could be pretty volatile next week as well, as a lot of those guys, the traders, will be on on vacation and stuff. So be cautious next week, as it could play out as we get a lot of day traders, and may not play out on a normal technical level next week. All right, so we do have an improvement in the interest rates. So thanks for stopping by. We'll catch you guys next week. I'm not sure what the schedule will be like next week, if the market will be open Christmas Eve or not. If not, we'll stop by on Wednesday to give you a next report. All right, folks, have a wonderful day. We'll see you guys next week. And if you guys like to receive these on a daily basis, just stop by Mike's Daily Market Report. You can subscribe up there. We don't sell your information or give your information away, and the only thing you'll hear from us is these videos. So once I upload, they'll be emailed out to you. Have a wonderful day. Bye.